Namaste, my dear friends. Now referring to you, paper number 3, Taxation Part B, Goods and Service Tax, Statutory Updates for our CA Intermediate September 2024 examination as well as January 2025 examination. As you are aware of that, the amendments which has been taken place up to 30th June 2024 is well applicable for our January 2025 examination. That also be covered here. Of course, this particular statutory updates also can be useful for our CA intermediate as well as CMA intermediate of December 2024 examination goers. So now I am referring to you chapter wise explanation with regard to statutory updates applicable for our CA intermediate September 2024 as well as the coming examination of January 2025 examination. Let us start with definitions, my dear friends. Let's start with definitions. Online money gaming has been defined now, which talks about a game which is playing with the help of internet or an electronic network and which includes online money gaming. So online gaming includes online money gaming. Further, they have defined the term online money gaming. What do you mean by online money gaming? Which means players pay or deposit money or money's worth including virtual digital assets in the expectation of winning money or money's worth including virtual digital asset in any event including game, scheme, competition or any other activity or process, whether or not its outcome or performance is based on skill or chance or both, and whether the same is permissible or otherwise under the any other law for the time being in force. So how to understand this online money gaming? We are causing the bet, money is involved by playing like poker baji or otherwise jungle rummy like that. Furthermore, we have play cards games. There are so many types of games are available through online. So where the money is involved cases, it is called as online money gaming. Further, my dear friends, we have the term specified actionable claims. What do you mean by specified actionable claims? Which means from 1st October 2023 onwards, very clearly stated that it includes betting, casino, gambling, horse racing, lottery, or online money gaming. It means to say that there are 6 points which are specifically mentioned under the specified actionable claims. Now, this supply will be treated as supply of goods under the GST, which will attract at the rate of 28% of IGST in the given case, my dear friends. Further, my dear friends, referring here, what do you mean by virtual digital asset? What do you mean by virtual digital asset? Very simply specified by saying that it is as defined in the Income Tax Act under Section 2, Section 47 capital A. Whatever said in Income Tax Act is whole good under the GST law also. Further, my dear friends, here there is a explanation is given for the term supplier as defined in section 2 subsection 105 of the CGST Act, where we have explanation with regard to supplier. Supplier includes online money gaming supplier or the specified actionable claims supplier or on behalf of the specified actionable claims supplied by any person, also be called as specified actionable claims supplied by himself or some other party on behalf of the somebody else, also be called as supplier. And furthermore, we have a term non-taxable online recipient, very important term. It is defined under the IGST Act, which is now recently has been modified, which means any unregistered person receiving online money, online information and database access or retrieval services located in the taxable territory. So, simplified manner, unregistered individual. I can give as an example here. Non-taxable online recipient means any unregistered person receiving online information database access and retrieval services located in the taxable territory. Now, not only an individual but also a particular business entity which is unregistered, basically, if they receive the services, namely OIDR nature services, we call them non-taxable online recipient. And also we have an explanation here. For the purpose of this class, the expression unregistered person includes a person registered solely in terms of clause 6 of section 24 of the CGST Act, meaning thereby government or local authority which is liable to deduct TDS under section 51 of the CGST Act, where they registered only to pay the TDS, not for any other purpose. If so, they also be called as unregistered persons under the particular definition of section 2, section 16 of the IGST, meaning thereby a particular corporation which is local authority registered under GST law only to pay the TDS under section 51 of the CGST. In that case, we call such a corporation is unregistered person only under this category. Further, my dear friends, there is a clarification given by the CBIC with regard to a particular holding company is providing shares to the subsidiary company employees, where the subsidiary company paying some consideration to holding company, whether it is import of services liable to pay IGST under RCM. A question has been addressed by the CBIC in the given case. What is the question here? Whether the activity of holding shares by a holding company of the subsidiary company will be treated as supply of shares or not, and whether the same will attract the GST or not. My dear friends, as you are aware of that, shares and securities are neither goods nor services. Very clearly we have been understood, it is neither goods nor services. If the shares has been allotted by this holding company to its subsidiary company in India, holding company outside India, subsidiary company in India, subsidiary company employees, the holding company is given shares. In that case, subsidiary company is making the payment to the holding company for the allotment of the shares to their employees on cost to cost basis. In that case, my dear friends, it is simple to say neither goods nor services, therefore not attract the GST. Even the subsidiary company providing shares to their employees also be not going to attract the GST, because it is very clearly excluded under the scope of supply, namely schedule 3 point number 1, activities of employee to the employer in the course of employment which is not attract the GST. Therefore, in any circumstances, allotment of shares by the holding company to its subsidiary companies employees not a supply. At the same time, the subsidiary company is making the payment to holding company on cost to cost basis, also be not a supply. However, if the holding company charging something extra payment over and above the allotment of the shares, extra charges if charging by the holding company, where the subsidiary company in India making the payment to holding company to outside India, then in that case it is import of services. Subsidiary company is liable to pay IGST under the RCM, reverse charge mechanism. Like that, the clarification given by the CBIC in the given case. Further, my dear friends, referring to here, taxability of the transaction of providing a particular loan by an overseas affiliate to its Indian affiliate or by a person to a real person. What do you mean by this? Extending the loan is a transaction in money, interest charged thereon also a transaction in money which is neither goods nor services. Money is not a goods nor services, and moreover the interest charged on the loan is exempted under the GST. The same thing here also explained by the CBSE. Interest or discount charged on loan amount is exempted from the GST when no consideration is charged for processing, administering or facilitating a loan. Processing fees, which are generally non-refundable, cover the administrative cost for related entities credit assessment may not be necessary and the administrative cost may be absent. Therefore, in the given case, a parent company giving the loan to Indian counterpart of the same nature of what we call associate enterprise. In that case, if a parent company giving the loan to the Indian counterpart, in that case, Indian counterpart is paying the interest thereon. Is attract the GST under the RCM? No, which is not a neither goods nor services. Especially it is exempted supply of services. However, if the parent company charging administrative cost, processing fees from its counterpart of the Indian counterpart of the company, that means a particular holding company outside India, subsidiary company in India, holding company charging some administrative cost by extending the loan to subsidiary company in India. In that case, the administrative charges paid by or processing fees paid by the subsidiary company to its holding company is not import of services. That question has been addressed here. Yes, that is import of services. If there is administrative charges, processing fees charged by the holding company from outside India to its subsidiary company in India, in that case, subsidiary company is import these services, liable to pay IGST under the RCM. Generally, holding company, a parent company, not going to be charged any administrative cost to its from its subsidiary company, from its related company in India, because both are almost closely associated with each other. Therefore, generally they provide the loan freely without any processing charges. If there is a processing charge charged by the parent company from outside India to Indian counterpart, where the Indian counterpart is making the payment to the holding company outside India for processing the loan, processing fees, that will attract the IGST as import of services. But what is not under GST? The loan amount given by the parent company to Indian counterpart and the interest paid by the Indian counterpart to the parent company outside India not attract GST. Further, my dear friends, referring to here, of course, schedule 3, where we have point number 6, actionable claims. As you are aware of that, specified actionable claims is excluded from the actionable claims, meaning thereby supply excludes actionable claims. What are they? Right to recover insurance money, claim for arrears of rent, unsecured debentures or unsecured loans, bills of exchange, promissory notes, bank guarantee, fixed deposit, and so on. In the given case, actionable claims alone excluded from the scope of supply, but under the actionable claims they specifically mentioned other than the specified actionable claims, meaning thereby under the exclusion, exception is inclusion. Here, to simplify and say that specified actionable claims shall be taxable under the GST as supply of goods is the meaning of it. Further, my dear friends, referring from the scope of supply, the concept here, there is a retrospective applicability of the particular following transaction. See, generally we have understood supply excludes point number 7 under the schedule 3, where supply of goods from a place in the non-taxable territory to another place in the non-taxable territory without such goods entering into India is supply excluded. Such a provision has been inserted in the particular supply excludes from which date onwards? From the, let us say, from the 1st of February 2019 onwards. Now, is it retrospective effect? Yes, retrospective effect, which is clarified in the Finance Act 2023. Now, what is the impact from 1st of July 2017 to 31st January 2019 for this given period? For this given period, there was payment of the GST. That time it was not excluded. In that case, it is excluded from 1st of February 2019 onwards. In that case, prior to that period, the GST already paid by the taxpayers. What is their fate? Here, simplified manner says that this provision is applicable retrospectively with effect from 1st of July 2017 onwards. But from 1st of July 2017 till 31st January 2019, if anybody paid the GST on such particular supply, no refund is allowed. Likewise, schedule number 3, point number 8 here is there, no, my dear friends. Supply of warehouse goods to any person before clearance for home consumption is supply excludes. Likewise, supply of goods by the consignee to any other person by endorsement of the documents of title to the goods after the goods have been dispatched from the port of origin located outside India but before clearance for home consumption. These also supply excludes. When they said supply excludes, with effect from 1st February 2019, they said it is excluded from the scope of supply. Prior to that, from the 1st of July 2017 to 31st January 2019, already we paid the GST. Can I get that particular GST as a refund? Because now it is made as a retrospective effect. From 1st of July 2017, it is supply excluded. But already I paid the GST. Can I get the refund? Refund not allowed. If you not paid, not required to pay. See the provisions. Further, my dear friends, referring here, statutory updates applicable for our coming examination of September 2024 as well as the January 2025 exam of CA Intermediate Taxation paper number 3. Part B, Goods and Services Tax. Now referring to here, taxability of ESOPs, ESPP and RSU provided by a company to its employees through its overseas holding company. What do you mean this? It is ESOP, namely ESOPs, Employee Stock Ownership Plan. What do you mean by ESSP? Employee Stock Purchase Plan. What do you mean by RSU? Restricted Stock Unit. So, I will give the meaning first of this. Then I will explain the GST content for this. In the case of employee stock option, ESOPs is an employee benefit plan that give workers ownership interest in the company in the form of the shares of stock. Employee stock ownership plan encourages employees to give their all as the company's success translates into financial rewards. So employee appreciation, thereby they giving the token of appreciation of their efforts, ESOPs by the company to their employees. An employee stock option plan, ESSP, employee stock option plan, ESPP, a company run program that allows employees to buy company stock usually at a discount over the time through payroll deductions. So here they will allot at a concession rate the particular stocks in the shares. In that case, employee stock purchase option. It is. Further, what do you mean by restricted stock unit? RSU is an reward or is an award of shares that come with the conditions, usually a vesting period before they are translated or transformed. These are the employees encouragement purpose. The employer is to provide by allotting the shares in the name of ESOPs, ESSP, ESPP as well as RSU. Such allotment of the shares to the employees by a particular overseas company, here you see, by an overseas holding company to an Indian counterpart. In that case, simple to say, a particular, let us say Microsoft, a US based company which is located in US, also be having the unit in India. Microsoft India is there. Actually, it is a parent company, US based company, Microsoft. Microsoft is parent company from USA, allotting the shares to the employees of Microsoft India. In that case, such allotment of the shares can be considered as a supply. The Microsoft India is liable to pay GST as import of services. In the given case, again the C base is said. The allotment of the shares is nothing but shares as securities, which is neither goods nor services. They specifically said if the company allotted the shares subsidiary company in India, let us say Microsoft India, providing shares of their holding company to their employees is nothing but supply excludes. As you are aware of that, the transaction is neither supply of goods nor supply of services, and moreover, it is covered under the entry number 1 of the schedule 3, which is supply excludes. The employee provide the service to the employer in the course of employment. Such allotment of the shares is form part of the salary, under the head salary. Therefore, it is in the course of employment, which is not going to tax under GST. Therefore, simplified manner to say that the allotment of the shares by the holding company to its subsidiary company in the name of ESOPs, ESPP or SU, shares to the subsidiary company employees or to their parent company, to the counterpart of the parent company. As I told you, Microsoft USA allotting their shares to the Microsoft India employees. In that case, it is neither supply of goods nor supply of services. Moreover, it is supply excluded. As a result, there won't be any GST. Further, it also clarifies that it is not livable on the reimbursement mode on cost to cost basis. Now, Microsoft India paying the money to Microsoft USA for allotment of the shares to their employees also not a supply if it is a cost to cost basis. If it is a cost to cost basis, that is important to note. If there is an extra charges are charged by the Microsoft USA over and above the share value. Share value is allotted, let us say 100 rupees per share, but the particular holding company charging some extra payment, 50 rupees per share extra they're charging, which is not relating to, not form part of the share value. In that case, such extra charges absolutely will attract the GST, and the counterpart in India liable to pay IGST under the RCM. Further, my dear friends, in the given case where there is a clarification given by the CBIC whether GST is applicable on reimbursement of electricity charges received by real estate companies, malls, airport operators, etc. from their lessees or occupants. Is it liable to pay GST? Simple to say, my dear friends. I will give a simple example. For example, let us say a particular shopping mall. Shopping mall name, let us say here, Grand Mall. Grand Mall is a shopping mall where the Grand Mall owner is allotted their shops to the various tenants on rental basis and charging the rent per month 1 lakh rupee. That 1 lakh rupee includes not only rent but also electricity, but also it includes cleaning, but also it includes all other things. In that case, it's composite supply. The principal supply is the rent. Therefore, the rent will attract the GST, which maybe includes the reimbursement of electricity, but it entire value attract GST. On the other hand, there are residential welfare associations or there may be shopping malls which they are going to be provide on rental basis and charging rent separately and particular electricity for common maintenance separately. Common maintenance electricity is divided into all tenants on equal basis. In that case, cost to cost basis, what is the electricity bill came? For example, it is 1,20,000 rupees. In that case, there are 4 shops inside, divided into 4 shops, or there are 1,20,000 rupees bill came electricity, where there is 12 shops are available. 12 shops are available. So per shop rupees 10,000. So 10,000 rupees collecting by the owner and paying to electricity department on actual basis, acting as a pure agent. In that case, question of liability does not arise on such reimbursement of electricity. If it is a form part of the rent, and that time breakup may be given. In spite of that, entire value is a composite supply which will attract GST under the head rent. Further, my dear friends, coming to one more clarification of the CBSE with regard to composite supply, where the cinema theaters especially selling the tickets to exhibit movies, not only selling ticket to exhibit the movie, during the intervals they used to provide the food and beverages. In that case, the ticket per head is rupees 500, which includes coffee, tiffin, tea and snacks. like that is given. In that case, it is as a compo supply. The supply is considered as a supply of cinema theater, exhibition of movie services. Accordingly, we attract GST. Suppose if selling the ticket at rupees 200 and cinema theater says there are counters where you can able to buy snacks and beverages, is up to your option. Separate. In that case, in the restaurant services is separately provided. In that case, cinema theater providing separately cinema exhibition services as well as restaurant service separately. It is not a composite supply. That time will attract the GST for the respective supplies, respect to GST will apply. Such a clarification given by the CBIC in the given case. Further, my dear sir, it is a beautiful case law, though it may be case law not warranted in the examination point of view at intermediate level, but I have brought this with the greater interest. The spirit of this case law is highly useful with regard to pre-packaged commodity. With regard to pre-packaged commodity is considered, my dear friends, where the pre-package should be done, the packing should be done before being the present of the buyer. The packing should be done well before present of the buyer, and that packing is required to mark MRP by as per the Legal Matters Act if the condition is satisfied, and the weight of the packet not exceeding 25 kilograms, not exceeding 25 liters. In that case, the pre-packed commodity will attract the GST. But in the given case, what happened? The Andhra Pradesh Civil Supplies Corporation instructed to the supplier of that goods, Red Gram, hey mister, you please pack according to my requirement. Then as per the requirement of the buyer, the pre-packing has been done by the supplier of the goods and supply the goods. Whether it is a pre-packed commodity, the Andhra Pradesh Authority for Andhra Pradesh very clearly, AR, Authority for Andhra Pradesh, Authority for Advanced Ruling is very clearly given the ruling by saying that since the packing has been done by the supplier only after identified the buyer, therefore it is not a pre-packed commodity. Resultantly, the supply of goods is not covered the pre-packed commodity, therefore not liable to pay GST. Like that beautifully explained by the Authority for Advanced Ruling by Andhra Pradesh, AAR, Authority for Advanced Ruling. In the case of Sita Ramanjaneya dal and fried gram milk case. But case law not required. What is important here is the spirit of the case is a pre-packed commodity where the buyer instructed the supplier to pack according to his requirement, and packing has been done and supplied to the buyer. In that case, pre-packed commodity kadayade. It is not a pre-packed commodity. It is pre-packed commodity kadu. Why it is not pre-packed commodity? Because the packing has been done after identifying the buyer. Pre-packed commodity, what do you mean? It should be packed before being present of the buyer. So here being presented the buyer, therefore it is not a pre-packed commodity. As simple logic has been introduced in the given case law. Further, my dear friends, referring to you, composition scheme, how to understand this? Composition scheme is considered where there is a supply of goods by the supplier through e-commerce operator from 1st October 2023 onwards, well permissible to do so. From 1st October 2023 onwards, a person who supply the goods through e-commerce operator well eligible for composition scheme. How to understand this? In the given case, if you refer, my dear sir, the benefit of composition scheme which was earlier not available to the registered person engaged in the supplying goods through an e-commerce operator shall now be extended to them. As a result, these registered persons now have the option to pay taxes under the composition scheme. That means a supplier of the goods can supply the goods to e-commerce operator, well, he is liable to pay composition rate only. Further, however, the restriction will continue to apply for such registered persons who are engaged in the supply of services through an e-commerce operator. That means this particular relaxation only for supplier of the goods, not for the supplier of services. If the supplier of services supply the services through e-commerce operator, in that case, they are disqualified from composition scheme. Whereas, in the case of supplier of the goods, from 1st October 2023 onwards, they can supply the goods through e-commerce operator. Still, they are eligible for composition scheme. So how it should be further understand with the help of the few examples I'm going to bring to notice, right? So look here, question 1. Can composition taxpayer make supply of services through an e-commerce operator? Here it is not so. The amendment applies only to the supply of goods through e-commerce operator and not to the supply of services through e-commerce operator. Services provided or service providers supplying through e-commerce operator are still not eligible for composition scheme. One more example, my dear friends, for your kind consideration, I would like to bring to your notice in the given case. One more example is as follows. Question number 2. Can a composition taxpayer make interstate supply of goods through e-commerce operator? Answer no. After the amendment, a composition taxpayer can only make intrastate supply of goods through e-commerce operator. The interstate supply of goods through e-commerce operator is still not permissible under the composition scheme. So, as a result, my dear friends, what we understand, supplier of the goods allowed to supply through e-commerce operator only intrastate supply. On the other hand, supplier of services should not supply the services through e-commerce operator. Further, supplier of the goods supplying through e-commerce operator, can they supply to interstate supply? Absolutely not allowed. That's why we have the provisions here for your kind consideration. With effect from 1st October 2023, following procedures shall be followed by an electronic commerce operator who is required to collect the tax at source under section 52 in respect of supply of goods made through it by a composition taxpayer. What are the compliances should be complied by the e-commerce operator who permitted to sell the goods of a composition taxpayer, that to intrastate allowed? See, it shall not allow any interstate supply of goods through it. Further, it shall collect the tax at source in respect of supply of goods made through it by the said person and pay the tax TCS to the government. Further, it shall furnish details of the supplies of goods made through it by the said person in the form GSTR 8 electronically on the common portal. So, I will give an example here. That example gives the clarity in the given case. Peter England is a trader who sells his ready-made garments, cloth online on Amazon India, an electronic commerce operator. He received an order for rupees 2 lakh in the previous year. Peter England also supplied the goods from the outlet. Aggregate turnover of the company in the previous year was 21 lakh. Peter England is eligible for composition scheme? Yes. From 1st October 2023 onwards, Peter England is allowed to sell the goods through e-commerce operator only intrastate supplies, not interstate supplies. As simple as this. Further, my dear friends, referring to you, exemptions under the GST, what amendments has been taken place here? Here, amendments first and foremost, I will say that in the case of a forward charge where the Indian Postal Department is already paying the GST for the supplies made by it under forward charge. Now, along with the Indian Postal Department, the Indian Railways has joined any service provided by Indian Postal Department or Indian Railways, which is taxable nature, forward charge only applies. Is an amendment. Further, my dear friends, further, here referring to you, supply of following services. The following services, if you refer here, these services supplied to governmental authority by way of water supply, public health, sanitation conservancy services, solid waste management services, and slum improvement and upgradation only exempted if it is provided to governmental authority. Which authority called government authority? Simple as aware of that, government authority means an authority establishment or established by the central by passing the act in the Parliament or state legislative assembly by passing the act in the state legislative assembly, or otherwise an establishment in which not less than 90% of the equity shares held by the company or not less than 90% of the voting rights of the company held by the government. That means to say that simplified manner, a particular governmental authority, which means the authority which is established by passing an act in the state assembly or in the parliament, or an institution which is set up by the government holding not less than 90% of equity shares in it or not less than 90% of the voting shares in it, to meet the objectives of Article 243G or Article 243W of the Constitution of India, we call the governmental authority. Now, if the supply of services to government authority, which one is exempted? Only the following exempted: water supply, public health, sanitation conservancy, solid waste management services, and slum improvement and upgradation services only exempted from the 20th October 2023 onwards. Further, my dear friends, if you refer the satellite launch services, earlier it was supplied by Indian Space Research Organization ISRO, or it is supplied by Anthis Corporation Limited, or New Space India alone was exempted. Now the amendment has been relaxed. Satellite launch services supplied by any person, though may be incorporated in the private companies, also eligible for the exemption. Suppose Sky Sky Square Private Limited is launching satellites in the orbit with their rocket launchers. That is also exempted. Satellite launch services supplied by any person is now exempted from the payment of the GST. Is an amendment, my dear friends. Further, my dear sir, under the exemptions, furthermore referring to you, whether District Mineral Foundation Trust set up by the state government or the government authorities and the eligible for the same exemption from the GST available to any other governmental authority. In the given case, what type of services are providing by District Mineral Foundation Trust? These service providing like a drinking water supply, environmental protection, healthcare facilities, education services, welfare of women and children, supply of medical equipment services, and etc. These are the nature. What is nature of supply? It is drawn from the Article 243G or Article 240W of the Constitution of India. As a result, supply of services by this particular District Mineral Foundation Trust is absolutely exempted under the GST. It is covering as a supply of governmental authority services supplied by government authority to meet Article 243G or Article 240W is qualified from exemption. Therefore, that is also exempted in the hands of the District Mineral Foundation Trust because they are providing similar nature of services covered under the Article 243G or Article 240W of the Constitution of India. That's why. Further, my dear friends, further here, the whether supply of pure services and composite supply by way of horticulture works where the value of goods constitute not more than 25% of the total value of the supply made to Central Public Works Department CPWD are eligible for exemption from the GST under the exemption category as supply of goods to government, local authority. Under that category is going to be exempt. Yes, the law says here it is exempted because the value of material supplied not exceeded 25% of the total contract. If so, is also be called pure labor services covering under the Article 240G or Article 240W of the Constitution of India, therefore qualify from exemption. Further, my dear friends, referring to here a particular definition from IGST Act under section 2 subsection 17 of the IGST, online information database access and retrieval services, OIDR services, now which has been explained by redefining it, which means services whose delivery is mandated by information technology over the internet or an electronic network, and the nature of supply renders their supply impossible to ensure in the absence of information technology and includes electronic services such as advertising on the internet, providing cloud services, provision of ebook, movie, music, software, and other intangible through a telecommunication network or internet, providing data, information retrieval or otherwise to any person in electronic form through a computer network. Online supplies of digital content like movies, television shows, musics, and other like digital data storage. And from 1st October 2023, what they did here is online information database access retrieval services, OIDR, which includes online money, online gaming, excluding the online money gaming. As you are aware of that, online gaming, which includes online money gaming. But under the OIDR includes online gaming but does not include online money gaming, meaning thereby online money gaming is also be carried out with the help of internet or digital network. In that case, online money gaming is different from OIDR supply in the given case. OIDR means online information database access retrieval services is different from online money gaming. But online money gaming is separately we have definition, and we also aware of that it is also be not possible without internet or digital network. So in the given case, OIDR means which includes online gaming but does not include online money gaming. Online money gaming is different, OIDR is different. Further, my dear friends, reverse charge services, reverse charge mechanism, supply of services. If the supplier is a government or local authority, provide these services, or the parliament or state legislature or the court or tribunal, it is fall under the reverse charge mechanism. Business entity being a recipient liable to pay GST if the business entity turnover in the previous year exceeded the threshold limit for registration with which you already familiarized. But here what is amendment means, if the supplies of that particular nature supplied by Indian Railways, in that case Indian Railways supplying which supply, taxable supply, which will attract GST, namely forward charge mechanism, is what they said. Further, my dear sir, director services, director of a company provide these services by holding the directorship in the nature of a attending the board meeting, sitting fees and all will under RCM, you are aware of that. But if the director provide these services to the company where they have directorship as per director personal capacity, in that case that is not an RCM. For example, if you refer here, Miss Rani appointed as nominee director by Rani Limited in Raja Limited, where Rani is provided her immovable property to Raja Limited on rental basis. Though the Rani is a director in the Raja Limited, the rental income cannot be taxed under RCM because her personal capacity she provided rental services to Raja Limited where she is a director. In that case, rental income cannot be taxed under the RCM. Who liable to pay GST? Rani liable to pay GST as a supplier of service. Further, my dear friends, from September 26, 2023 onwards, the Indian government has been removed the exemption which was earlier enjoyed by the Flipkart, the what we call Facebook, Google, like that. What are they here? If you refer here, OIDR services, online information database access retrieval services providers, if they provide these services to non-taxable online recipient, attract the GST or not? Well, attract the GST now at the rate of 18% of IGST. This change, which came into effect from 1st October 2023, means the companies such as Facebook, Google, and various e-educations, namely the electronic channels providing education platform, will face an IGST up to 18% on their services provided to both individuals and the government. Namely, we used to say that non-taxable online recipient, namely unregistered persons. Until this recent change, OIDR services provided by overseas companies to the Indian central government, state government, government authorities or individuals are for non-business purposes were exempted from tax, which is not exempted, which is well taxable under the GST, under the RCM or FCM. It depends. The transaction is a B2B RCM, B2C FCM. Further, my dear friends, import of services where the importer paid sea freight, where he imported the goods on CIF basis, where the goods has imported CIF basis, the sea freight form part of the CIF value, cost insurance freight, where he is going to pay import duty under the Department of Customs. Again, payment of IGST on the sea freight does not arise. So no GST on sea freight is the amended provision in the given case, my dear friends. Further, in the case of reverse charge mechanism section 9 subsection 5 of the IGST, where we have one amended provision here: transportation of passengers by a road taxi, motor cab, maxi cab and motorcycle with effect from 20th October 2023, any other motor vehicle, in that case e-commerce operator only liable to pay GST if it is provided through e-commerce operator. But except omnibus, where the supplier supplies such omnibus services through e-commerce operator is a company, in that case is a forward charge. What do you mean this? If you refer here, my dear friends, is a omnibus. If the omnibus services are provided by a particular owner who is a company means which is registered in the Companies Act 2013 as a body corporate. If there is a case, if the company is providing services of omnibus, transportation of passengers through e-commerce operator, liable to pay GST, FCM, omnibus owner liable to pay GST. Suppose if my name is XN company, sole proprietor, I am the XN company as a sole proprietor. If I provide the omnibus services, transportation of passengers through e-commerce operator, who liable to pay GST? E-commerce operator liable to pay GST under section 9, section 5 of the CGST. If the company, namely X Private Limited, own the omnibus, provide the services of transportation of passengers through e-commerce operator, who liable to pay GST? Supplier. X Private Limited is liable to pay GST in the given case, is an amended provision in the given case. Further, my dear friends, with regard to time of supply, what do you mean by time of supply? How to understand time of supply is very important to know the due date of payment of the GST. Am I right? So, in the given case, if there is supply of goods, as you have read, supply of goods, time of supply is equal to the last date to issue the invoice or date of invoice or last date to issue invoice, whichever is earlier is the time of supply. But the advance payment cannot be time of supply. But this has been now got amended if the goods are belongs to like specified actionable claims. If the goods are specified actionable claims, then if that supply has been taken place, the last date to issue the invoice or the payment received, whichever is earlier, meaning thereby date of invoice or last date to issue the invoice or date of payment, whichever is earlier, is a time of supply in the case of specified actionable claims, which is called as supply of goods. However, if the supply the goods other than the specified actionable claims, as per the notification number section 6/2017, the liable to pay the GST is time of supply comes into picture, where the invoice should be issued in accordance with the section 31, subsection 1, clause A, clause B, or the last date to issue the invoice. Whichever is earlier is the time of supply. Payment cannot be time of supply for any other supply of goods other than specified actionable claims are considered, my dear friends. Further referring here, with one example, my dear, in the given case, online, namely specified actionable claims, which you are aware of that 6 points. What are they? Lottery, betting, gambling, casino, horse racing, online money gaming. You are aware of that, na? In the given case. Mrs. Pokery Private Limited, supplier of online money gaming, registered person under GST located in the New Delhi, supplied online money gaming, namely goods, on 1st January 2024 to Mr. Appavi of Chennai. Case 1, invoice issued on 1st February 2024 and payment received on 26th December. Case 2, invoice issued on 1st February 2024 and the payment received on 26th March 2024. Find the time of supply in the above two cases. Simple, my difference. In the first case, when the supply of the goods taken place, 1st January, supply of the goods taken place. When the invoice has been issued, 1st February, meaning thereby invoice not issued in accordance with the section 31, subsection 1. In that case, the last date to issue invoice, 1st of January 2024, or date of receipt of the goods, date of receipt of the payment, 26th of December 2023. So 1st of January 2024 or 26th December 2023, whichever is earlier. Which is earlier? 26th December. Therefore, first case time of supply is 26th December. Got the clarity, my dear friends? The second case, invoice issued on 1st February and payment received on 26th March 2024. That means the invoice here also not issued in accordance with the section 31(1). In that case, last date to issue invoice 1st of January 2024 or the payment received 26th of March 2024, whichever is earlier. 1st of January 2024 is earlier. That is the time of supply in the second case. In case of specified actionable claims, only this. Further, my dear sir, referring to you here, referring to you now, one more important circular with regard to time of supply issued by the CBIC. Clarification on the time of supply regarding the supply of services of construction of road and maintenance thereof under the National Highway Projects of National Highway Authority of India in the hybrid annuity model. How to understand the time of supply? The entire explanation which now I am bringing to notice only by way of simplified numeric example. As you are aware of that, for example, in the given case, a particular service, when you call continuous supply of service, the service taken the time to complete for a period more than 3 months as defined in section 2 subsection 33 of the CGST. If so, in the given case, the time taken to complete the road construction supplied by X Limited, namely supplier of services, who also be called as concessionaire, for a period of 1 year they taken the time to complete. After completion of the road, after the 1 year complete, after taking the 1 year time, they are also going to take care O&M, operations management, for a period of 3 years. So total consideration is agreed to pay by NHAI, National Highway Authority of India, being recipient, to X Limited 2 crores. They said, X Limited, when you complete that particular project, road construction, I will pay to you 50 lakhs of rupees. Balance 1 crore 50 lakhs, I will pay in 3 equal installments in 3 years. Because the 3 years you have to maintain the road operations and management purposes, I will release every year 50 lakhs, 50 lakhs, 50 lakhs. Because of time value of money, instead of 50 lakhs, I will issue every year 60 lakhs, 60 lakhs and 60 lakhs. Namely, 10 lakhs interest also I will pay to you, set by NHAI to X Limited. Supplier X Limited, who is a concessionaire in the given case, agreed for that. Okay, sir. Then the supply is completed when? On 1st August. 1st August 2024, supply is completed. Duration is 1 year. So it is continuous supply of services. When the supply is completed and the payment when made, the payment has to be made in the given case at the time of completion of service. So when the supply is completed, payment also be made. Therefore, time of supply for 50 lakhs will be the date of completion, namely 1st of August 2024. Is it clear? By the time you have to issue the invoice. Very good. The balance payment in 3 equal installments clearly mentioned in the contract. Date of installment due 1st January 2025, second installment due 1st January 2026, third installment due 1st January 2027. Very clearly mentioned in the contract. In case of supply of continuous supply of services, if the due date of payment clearly mentioned in the contract, the invoice should be issued on or before the due date or the date of payment, whichever is earlier. So that is the date of issue of invoice. That is the time of supply generally. Is clear? In the given case now, here the 3 installments, the balance 1 crore 50 lakhs collecting on 3 different dates with the interest of 10 lakhs every year. So 50 lakhs plus 10 lakhs, 60 lakhs collecting. For the entire 60 lakhs, what is the time of supply for the over period of 3 years? 60 lakhs, 60 lakhs, 60 lakhs collecting, which includes interest. Means when this particular amount is paid with the interest, they given here. The amount paid on 1st of December, 1st of February, sorry to say, 1st of February, they paying the amount. 1st of February 2025, they paying the amount. Whereas due date to pay when? 1st of January 2025. So due date of payment or date of payment received, whichever is earlier. Which is earlier? Installment due is earlier, 1st of January. That is the time of supply for the first 60 lakhs of payment received. Second installment, when the payment is received, namely on 31st of December 2025, whereas the due date to pay is 1st of January 2026, which is earlier here, 31st December 2025. Therefore, the invoice should have been issued on or before 31st of December 2025. That is the time of supply. In the case of second installment received 60 lakhs, that is time of supply. I clearly mentioned time of supply here is 31st December 2025 because it is earlier. When you come to the third year, when they receive the 60 lakhs in third year, where the due date to pay is mentioned in the contract 1st of January 2027, where the payment is with the interest paid on 1st of February 2027, which is earlier, 1st of January 2027 is earlier, is the time of supply in the third case. 1st of January 2027 is like that. You have to proceed to find out the time of supply in the case where hum project, namely hybrid model, namely hybrid annuity model is considered, where concessionaire receiving the payment over a period of a few years, where they are maintaining O&M, operations management service providing, after completion of the project. If so, time of supply should be considered as per the continuous supply of service. In this manner, you have to identify the time of supply set by the circular of CBIC. Therefore, I mentioned here simplified manner by saying that time of supply in such cases, if the invoice issued on time, date of issue of invoice of the issuance of the invoice or the date of issue of the payment, which is earlier. If the invoice not issued at the time as per the time, therefore the date of provision of service, due date of payment, which is mentioned in the contract, or the date of receipt of payment, whichever is earlier, is the time of supply. As simple as this. In the given circular of CBSE, clarification on the time of supply of services of spectrum usage and other similar services under the GST. What is the time of supply? Generally, my dear friends, as you are aware of that, spectrum services, namely the space available in the satellite to use by telecom operators, allotted by the government, Union Telecom Ministry, which is central government. Supply is central government, recipient government companies, business entity. It is under GST and RCM. If it is RCM, supply of services, time of supply is what? As per section 13, subsection 3 of the CGST, the date of payment or the first day that occurs after expiry of 60 days from the date of invoice, whichever is earlier, as you are aware of that. Now, in the given case, spectrum cases, what happened? It is almost all allotment of license fee is to corporate entity by government, let us say 1200 crores. It is for 5 years period. 5 years period means what? More than 3 months continuous supply of service. In the given case where the supplier of this particular services, recipient liable to pay GST. In the given case, supplier receiving payment from the recipient, namely corporate companies. Let us say, for example, the government is a supplier, recipient is, let us say, Airtel company. If so, 1200 crores allotment of license for 5 years spectrum usage. The Airtel said, I will pay upfront 200 crores. Balance 1000 crores I will pay over a period of 5 years. Accepted by the government. So upfront paid how much? 2 crores. The payment date is a time of supply for the recipient, namely Airtel company, to pay GST and RCM. Very good. The balance 1000 crores going to pay over a period of 5 years. In that case, the time of supply here, they said, it is not the first day that occurs after expiry of 60 days from the date of invoice. They said here, time of supply is GST is payable on deferred payment, and as and when they are due or made, namely paid, whichever is earlier. Upfront payment, time of supply goes to upfront, the date of payment. The balance 1000 crores going to pay over a period of 5 years. The due to pay each installment over for 5 years. Each installment due, the date or the payment date, whichever is earlier, is the time of supply, but not the first day that occurs after expiry of 60 days from the date of issue of invoice. In the given case of spectrum allotment by the telecom companies to corporate companies, which is falls under RCM, recipient liable to pay GST cases.